Hey, what's good, everybody? This your man, Prof. Zones. The Prof is not for Professor, but for profits. And yeah, I'm back again with another one, guys. And today I want to speak to you about NFP. So a lot of people do not understand a couple of things that are actually going on in NFP, right? So some don't understand what it is, some understand what it is, but actually I just want to educate you and put certain things in a layman's term so that you can kind of understand why is NFP such a big deal and what are the other driving economic indicators that you guys can actually tune into so that you can be able to understand it better. So yeah, guys, with that said, let's just get started into it, right? Non-farm payrolls, guys, is a key economic indicator that basically is released by the Bureau of Labor Statistics. And what it does is it tracks employment trends, right? So from the previous month. And why it's non-farm payrolls is because it does not include jobs within the farming industry, the farming sector, the farming industry basically. It doesn't include jobs that's within government sectors. It doesn't include private household employees, and it doesn't include employees from the non-profit organization sector, right? So basically that's why it's called non-farm payroll. Basically, more jobs lead to what? It leads to a stronger GDP of that country. It leads to what? People spending money, hence the GDP going up, right? And when people are spending money, that means goods and services are being distributed. And when they're being distributed, that means people that are running and selling and making those products and services have more money to create more of those products and services, meaning jobs now go up because now people need more and more and more help to actually churn out that service that they're churning out. Meaning also warehouses, when warehouses are working, there's more jobs that are being hired within the warehouse spaces, meaning more products are being made, meaning more products are being sold, meaning the country's GDP is going up. So guess what? That's good for the currency. So yeah, guys, these other economic indicators are very key for you to also look at when trying to make sense out of the direction or the trend of NFP, right? So unemployment claims is a very key one. Initial jobless claims is a very key one. GDP also as well. ADP, employment change as well. Consumer confidence as well. Just to name a few, guys. Just to name a few. So now let's delve a little bit deeper into some of those, right? And actually what's actually happening. So the unemployment rate, it says itself, guys. Look at the definition first, right? Look at the definition first, and then you'll most likely understand what's going on. So unemployment rate. So basically when those numbers, so we'll make an example of USD, right? When those numbers come out and the unemployment rate is higher, that means it's bad for the dollar because more people are unemployed. So you already know what that is basically insinuating in terms of the NFP numbers that might come out that month, right? So if the unemployment rate was higher last month, then it's bad for the currency. Because if the unemployment rate is lower, then it's good for the currency because less people are what you call unemployed. So it basically says itself, guys. Okay, now let's move into the other one. Initial jobless claims, right? So also look at the wording, guys. Look at the wording. It says itself, initial jobless claims. So guess what? The initial amount of people that claimed to be jobless. So we can have the unemployment rate, but that doesn't mean it's going to reflect exactly with the initial jobless rates because those are the people that filed that they do not have employment, right? So basically, those two numbers, those two economic indicators, they are key to also finding out, having clues on what might happen with non-farm payrolls, right? Now let's move on to another one. Average hourly earnings. Average hourly earnings. That also says itself. So now if people are getting paid less per hour, that means that the GDP of that country is not doing very well because there's not enough money in circulation. There's not enough money in circulation so that people can actually be paid what they're worth for that hour. So if a lot of people are getting paid $5 an hour and all of a sudden they're getting paid $4.7 or $4.5 per hour, that is basically not a good sign for the economy because the average hourly rate has went down. You see, so I'm building a picture here. So do you see why all these economic indicators, when you look at them in one picture and then you actually jot down a report, you can be able to track a country's GDP properly each and every month. Okay, and just the last one that I want to talk about. There is a little bit more, but yeah, guys, I just don't want to make this video too long, right? Consumer confidence. That also says itself. As I said, that I'm going to try to explain this in layman's terms. So think of consumers and confidence. So when the consumer confidence report is high, the percentage is high, guess what? The consumers are confident in the economy, meaning they're spending, they're going out. Money is flowing. So when they get money, they spend money. So the consumers are confident within their dollar, meaning things are not too expensive, things are not too cheap. So consumers can consume what they want. So it's not too expensive to go to the movies. It's not too expensive to actually just do stuff, because from what they earn and what they're making, they can easily spend that. So meaning their confidence is up for them to consume products and services. So usually, guys, look at the definitions first. Before you go deep into it, just look at the definition and write it down bit by bit, and you'll be able to see that, oh, this actually builds up a story towards things like your non-farm payrolls, so that it can be easier for you to kind of have a fundamental sentiment or perspective towards what might happen, what the numbers might be, or if the forecast is basically where you also think it should be, judging by your thesis or judging by your research, right? So yeah, guys. So now, I know a lot of you want to know that, okay, yes, we get it. We want to know about the strategies. We want to know about how can we trade NFP. Well, I'm going to do another video on that, guys, because that's mainly focusing more on the technical side of things. Now, I just wanted to give you guys a glimpse of the fundamental side of things, right? Because technically, what you'll focus on, I'll just give you like maybe some bullet points. What you'll focus on as a trader now, as a person that's getting on the charts, you've done your due diligence when it comes to fundamentals. Now you're getting on the charts and you want to trade it, right? These are the points you'll actually look at. So you've already looked at market expectation and the consensus, right? That's what we spoke about. So now what next? You need to be able to look at the volatility that might happen. So you need to be ready. So your risk management must be on point, because the volatility of these events can be quite huge. And then you also need to look for what? Your technical analysis in terms of where will you get involved in the market. And you also need to look at your pre-NFP strategies and your post-NFP strategies, right? So basically, you need to know what you'll do before NFP, what you'll do after NFP. Right? So those are one of the few things basically that I'll mention right now. And also, not to forget, your emotional discipline needs to be on par, and also the platform that you're using. You need to understand it. You need to understand the broker that you're using in terms of, does it allow you to do certain things during news? Do they have a huge spread? Does the spread like widen to a point where you can't be able to trade? What type of accounts can you trade NFP on that specific broker? And yeah, guys, basically I just wanted to keep this video below 10 minutes as usual. So yeah, with that said, guys, this your man Prof Zones, and Prof is not for professor but for profits, and I'll catch you on another one. And hopefully next time we'll be speaking about the technical side of NFP instead of the fundamental side. But I'm not only going to speak about NFP, guys. More fundamental breakdowns are coming. So with that said, clean.